last month, the president passed the CARES Act. And the CARES Act provided a lot of benefits for people. Again, I don't want to make this political. I don't care whether you think it's a good or a bad idea. It's just a fact. It's what we have. And the CARES Act provided the opportunity to assist people in lots of different ways. And one of the ways that they provided was the opportunity to get a forbearance. And the purpose was to say, hey, you're going to have people who can't afford to make the payment because literally we shut down the economy and they're not working. And in the past, when banks had a hardship, they were required to prove that you had a hardship in order to give you a forbearance or a modification. And if anybody was a homeowner back in 2008, some of you probably have been through challenges where you were a homeowner and you wanted to modify your mortgage and you had to send a whole bunch of paperwork to the bank. And then 3 months later, they'd call you back and say, yeah, we lost some of it. They never said that, but they did lose it. And then you had to send them all the paperwork again. And then they called back again and said, oh, the paperwork's expired and we need you to get us more paperwork. And it's a vicious cycle. And the government knew we could not afford that vicious cycle. So they said, look, anybody who claims that states that they are impacted financially by the COVID-19 shutdown, you can have an automatic 3-month pause button on your mortgage payment. You could theoretically extend that to 6 months easily. And the bank has the option to extend it to as much as 12 months of no payments through the term forbearance. It also said very clearly that it will not negatively impact your credit score. And that's a very true statement. It is not going to negatively impact your credit score. But there's a lot of pieces to this that weren't as clearly defined that I want to try and define for you guys today. So first of all, forbearance will impact your ability to borrow money in the future, because they're not showing you as late, but they're showing you as being in forbearance. And duh, John, we're in forbearance. But the problem is, in forbearance means that you didn't have enough money in savings to make it through 1 or 2 or 3 months of a rainy day. And the truth is, from a lender's perspective, that's a risk. Now, I know it's pretty common. It's not, I hate to say it's the American way, but it is, that people are not saving a lot of money. But you're showing your cards by saying, I haven't saved enough money and I needed a bailout. I need help from the government. I need help from the banking system. And there are negative implications to that. Just like the banking industry got a bailout in 2008, and again, you can claim that that was their own fault or not, but the fact is that the banking industry had to get a bailout and there were negative impacts long-term. It will affect, because your credit report is going to say you were in forbearance. I know for a fact right now, because I have a client whose credit report says that they were in forbearance, that I cannot do a mortgage for that person for the foreseeable future. We've not defined yet what that future is. But here's what I think. I think that it's going to be at least 1 year from after you started catching up your monthly payments. So I want to talk about how you catch up the payments and what that looks like. But if you're simply in forbearance, it means, hey, I couldn't make my payment during this time frame. But we always have to prove when doing a mortgage that you have 12 months of on-time payment history on a mortgage. And so if we look back in 6 months from now, we look back and we say, well, you had 6 months on time, but you had 3 months off. Well, then that's not 12 months of consecutive on-time payment. You weren't late, but you didn't make payments all 12 of those months. Therefore, we'd probably have to wait a year from the time that you caught up the forbearance before you'd qualify for another mortgage. And I told you guys earlier, we expect interest rates to stay low, potentially going even lower than where they are right now. And so you're losing that opportunity to take advantage of those lower rates if in fact that happens by going into forbearance. Now, don't misunderstand. If forbearance is the only way that you can afford to put food on your table, go into forbearance. I'm not trying to scare you out of doing it. I'm just trying to give you as much knowledge as I can about how this works. So Kathy asks, so basically it just prevents foreclosure. It doesn't really even do that, Kathy. And I'll explain more in just a second, so I'll get back to that. Wendy said, when they come out of forbearance, do they have to pay back the previous months at that time, or do they have to go to the back of the loan? Well, Wendy, that's a phenomenal question. Thank you for asking. Wendy works for me, but this was not a planted question. But anyway, I'll go into that in just a second. So it's right here. Talk to your service about how they want you to make up the payments. The truth is the servicers have no idea yet. The federal government threw these rules out and they never talked to the banks. The banks now have to figure out, well, first of all, how do we staff up enough to even answer the phone when somebody is calling to ask us these questions? They can't staff up fast enough. And so what they've done is they've put recorded messages on their voicemail that says, hey, if you're calling about forbearance, here's what forbearance means. Forbearance means that you get to skip 3 payments, and at the end of the 3 payments, you may have to pay all of those 3 payments plus your next payment back at the exact same time. If you'd like to proceed with forbearance, please press 2. And that's it, okay? Or they put a little note on your website, and you go in there to make your mortgage payment, and it says at the top, would you like to have a forbearance on your loan? You click the button that says you'd like to, and boom, boom, you're in forbearance. Because the banks are prohibited from asking for any proof that you needed to be in forbearance. The general thinking, and this kind of goes to what Kathy asked about, does it just prevent foreclosure? Well, yeah, if somebody loses their job, which we know a large portion of the American population is out of work right now, and they can't make their mortgage payment, then once they're 4 months behind, then it goes into the foreclosure process. And so this prevents that from happening, but it also prevents their credit score from being harmed, and it gives them some options to, hey, maybe in 4 months, I'm able to get back to work and I can get back on my feet. The problem is the hole has been dug, because forbearance is not a long-term solution. Forbearance is the Band-Aid, okay? So I'll talk about for a second what the rest of it is. The first thing though is you've got to talk to your servicer about when they want you to make up the payments. We are learning more every day, and the rule book's being written every day right now. And what I mean by that is Fannie Mae and FHA, Fannie Mae, Freddie Mac, FHA, and VA, they don't know how to deal with all this either. And so they're kind of taking out their books of forbearance and their rule books and dusting them off and saying, well, that rule works fine. Ooh, that rule doesn't work so well in this environment. Let's rewrite that rule. And sometimes they're rewriting it good and sometimes they're not. As an example, and please take what I'm telling you with a grain of salt, because I'm learning every day new information. So I'm telling you an example of what I understand to be true right now. But things are changing so quickly that what I understand to be true today is likely to be untrue tomorrow. FHA says if you have had a forbearance and you can't make your payments, then no problem, you're in forbearance. At the end of the forbearance period, whatever time, 3, 6, 9, 12 months, if you can't catch up the payments, then FHA will write a check to reimburse the servicer, because we're making the payment every month on your behalf. And that's the pain for the mortgage bank. That's not your problem. It is a challenge for the mortgage industry, because if we're losing money by having to write checks to cover the payments of people in forbearance, we have to make up for it by charging higher mortgage rates. We have to get more income over here to make up for our losses over here. So that goes back to what I said earlier about there's many reasons why interest rates are higher today than they should be, and the forbearance tsunami is one of those reasons. And so as we deal with this, we're basically, FHA said, as you get to the end of that process, we 3, 6, 9, 12 months, we'll reimburse the servicer for the money that they had put out, and we'll take all of the money that was owed by the homeowner, and we'll just create a new second mortgage, and we'll put it on the end of the loan. And so you only have to pay that back when you sell the house, when you refinance the home. You don't make payments on it. It's just a HUD loan. It's a second mortgage that's put onto your home. That is my understanding of how it works. Please don't take that as gospel. I need disclaimers everywhere right now. The rules are changing every day, but that's what I heard most recently. But the key is, no matter what, it is postponement, not forgiveness. And it's not likely to get postponed to the end of your loan, although I just told you that FHA is more likely to do it. Fannie Mae, Freddie Mac are not likely to do that. What they're more likely to do is a modification. A modification is 100% a negative impact to your credit score. You are literally saying to the bank, I cannot meet the obligations we agreed to. I need you to modify my terms, or I'm going to go into foreclosure. That's literally what you're saying when you do a modification, and it is a significant negative impact on your credit. Again, if it's the only way to keep your home and move forward, and you have a sizable amount of equity in your home, then by all means, do the modification, because that is way better than losing your home to foreclosure. The negative credit implications of modification are nowhere near as bad as the negative credit implications of foreclosure, but they are still significantly impacting your credit score, and it's going to bring your score down, and it's going to hamper your ability to purchase a home for the foreseeable future. But essentially, the modification does give you the ability to restructure your loan long-term and be able to stay in your home. So here's the bottom line. If you have good credit and good income and a decent amount of equity in the property, maybe the simple answer is to do a cash out refinance, because that way you can pull out some reserves, keep it in the bank for a rainy day. It's a rainy day, and then you preserve your credit. And so that is a shameless plug for me. But the reality is, guys, it's a good choice when it comes down to, hey, I'm not comfortable right now with the things that are going on and I'm worried. Maybe I'll go into forbearance as a defensive position to protect myself. Even though I can afford my payment, I want to protect myself. That's the wrong move. If there is nothing else you hear from me right now, if you have money in a rainy day fund and you are worried about your ability to pay your mortgage because your income has dropped, it's raining. That's when we use the money in a rainy day fund, is right now. Do not file for forbearance if you think that's just a way to protect yourself. If you've already filed for forbearance and this is changing your mind and you're thinking, maybe I don't want to do this, you have about a week to fix the problem. Because if you make your April 1st payment in April, then you're fine. Now you have to call the bank and tell them, hey, take off the forbearance. I don't want my loan to show it's in forbearance. But you have to make the payment before the end of April. If you wait until May, then you've missed a payment. You can't undo the negative impact of forbearance. It will impact your ability to borrow down the road, and there's no way to undo that. So that's my number one message right now I want to get across. If you've been thinking about forbearance, but you have the ability to pay the April 1st payment, then wait, see what happens, because it's not like you have to file the forbearance right now. Do it when you have to. Understand there are negative implications, but it's way better than being late on your mortgage. Do not be late on your mortgage, but if you can make your payment, make it. It is way better for you long-term than trying to do a forbearance when you don't need to do the forbearance. So I'll show you right now what the impact is on a potential borrower, and it shows up just like this. It says affected by a natural or declared disaster. So this was one of my clients. I've blacked out all the information to protect the innocent, but it popped up and I asked the client, I said, hey, I see something on your credit report and it's something I'd never seen before. Did you happen to file for a forbearance? And she said, well, no, why do you ask? And I said, well, it says here that your loan was affected by a natural or declared disaster, but I know that your house hasn't been impacted by an earthquake or a flood or a wildfire or anything like that, has it? And she's like, well, no. And I said, okay, did you ever talk to the bank about a forbearance? And she says, well, I called the bank and I thought, hey, because of the fact of all this going on and our worry, I thought it might be better to keep some extra savings in the bank and not make our mortgage payment for 3 months, and then I can just pay it at the end of the loan. And so I called him and I asked him how it worked, but nobody answered. And so I thought, well, okay, forget it. I'm not going to do it if I don't know how it works. But then I happened to be on their website and I saw a button that said, click here to apply for forbearance. And she's like, well, yeah, I'd like to apply for it because I want to know what it means. And I said, okay, what happened? And she goes, I clicked the button. And I said, then what? And she said, nothing. I said, what do you mean? And she said, I haven't heard anything. She goes, actually, I lie. I had heard something because I called them. And I said, well, tell me what happened. And she goes, well, I called them and I told them I hadn't heard anything about my forbearance request. And they said, yeah, she actually got through to them. They said, yeah, we're super, super busy. And the government rules and the CARES Act didn't require us to communicate back to you. We're so busy receiving requests for forbearance that we don't have the time to tell you we got your request. We don't have the time to tell you what the terms are on the forbearance because our phones are ringing off the hook with people asking for forbearance. And we're just saying, sure, no problem, check, moving on to the next phone call. And so she said, what's going to happen? When do I pay it back? And they said, well, we're likely going to want you to pay it back after the 3 payments are skipped. So in July, you skip April, you skip May, you skip June, and then we're likely going to have you make the payment to us in July, or 4 payments in July. And she said, well, I can't do that. I mean, that doesn't help me at all. And they said, well, yeah, but that's the rules are right now, is that, that's what's going to happen. And she said, okay, well then forget it. And she said, John, I made my monthly payment, and so I'm good. I said, yeah, you're not so much good, because your credit report still says you were in forbearance. Because we know that affected by natural or declared disaster, the president declared a national disaster for the entire country over COVID-19. So if you raise your hand and say, hey, COVID-19 impacted me and I can't make my mortgage payment, please give me a forbearance, you've been affected by a natural or declared disaster. Not natural, but declared. And therefore, we know you're in forbearance, even though it didn't hurt your credit. We are aware of that. And with that knowledge, there's nothing in the law that says banks have to ignore the information they have. That's where it's going to impact you. And in her case, she was already enrolled in it and she didn't even know. So reminder, if you are in a forbearance and you don't want to be, make your payment. No matter if you can reach the bank or not, make the payment before April 30th, because then even if it's next month, we can get undone the forbearance implications on your credit so that there's nothing negative. But once you go into May and you didn't make that April 1st payment, we can't undo it because you took advantage of the forbearance. You didn't make the monthly payment. You're stuck. Again, yes, that does suck, Kathy, I agree. So that's your only option, is to make the payment now if you have the ability to. If you can't, this is not intended to be a guilt trip. It's not intended to make you feel bad. It's not intended to be any of those things except awareness, which is like with my client in this situation. She just wanted knowledge. She just wanted to know what it meant to be in forbearance. And once she knew, not for me, she says. So that's the thing. You need to understand it. So Wendy said, do you think the same thing will happen if they allow this for renters? There's been some talk of that. I don't know. I got to be honest, that scares the bejesus out of me. If we end up, basically, it's what happens to the landlord then? Because it's exactly what's happening to the mortgage industry right now, is that the government has said homeowners don't need to pay the mortgage company, but the government is not stepping in to help the mortgage company. We are responsible still for paying Wall Street for the mortgage. And so to make matters even worse, yesterday, Fannie Mae and Freddie Mac came out and said, hey, we'll help you guys. If there's a homeowner or a borrower who did a loan and they go into forbearance between the time you funded their loan and their first payment, the old rules were that Fannie Mae and Freddie Mac would not buy that from us, which means that the bank would lose a bunch of money. But now they said, okay, we understand your banks didn't choose this, so we will buy it from you, but we're only going to pay you 93% of what the face value of the mortgage was. What that really means is that if we loaned somebody $300,000 2 weeks ago, and 2 weeks later they lose their job and they go into forbearance, it means that we will only receive on that $300,000 loan, we will take a haircut of $21,000. In other words, Fannie Mae says, yeah, we'll buy the mortgage, but we're only going to pay you $279,000 back of the $300,000 that you loaned. And so we're taking a loss of $21,000 because the government said that you can file for a forbearance. And the government says, but if they file for forbearance between when you do the loan and their first payment, then we're going to take $21,000 or 7% of that mortgage balance away from the mortgage bank that started the loan. That's a real scary proposition to be in as a mortgage bank. Now think about it, Wendy. What if they do that for all renters? I understand the benefit to the renters, and I understand the need for that. But the unintended consequences scare the heck out of me, because what happens to all of the landlords? The landlords still have to pay the payment to the bank. That's going to force the landlords into forbearance. That's going to force the landlords into modification. It could force the landlord into foreclosure. I hate to say this, but what the government's doing to the mortgage industry is going to force some mortgage companies into bankruptcy, because they're not going to be able to afford to make the mortgage payments while the loan is in forbearance and lose 7% of the mortgage value if somebody files for forbearance within the first month. It is a significant impact to the industry, and it is something that we all have to be aware of. So huge concerns. And guys, the tsunami is taking off. So what we see right now are numbers as of April 12th. And what we see were forbearances were super, super low back at the beginning of March because COVID-19 wasn't an issue. We weren't shutting down the economy. And so what's happened since then is significant uptick, and that was only as of April 12th. Most mortgage owners, most homeowners know that your mortgage isn't, you don't have a late fee until the 15th of the month, but if you're not going to make your payment, who cares if there's a late fee, because they won't charge it to you if you have a forbearance. So most homeowners are holding on. The call volumes to mortgage servicers this week have skyrocketed. The numbers aren't yet in here. We think it could be as many as 20 to 25% of people who have a mortgage in the country could be asking for a forbearance. The problem is that a large portion of those people don't understand that there's significant negative impact to the forbearance request, and they just assume the money's getting tacked on at the end of their mortgage, and they have a big surprise coming.